Forex scams follow 5 patterns regulators have written down. A 5-minute check stops most of them. Here's
Forex scams cost retail traders hundreds of millions of dollars every year. The patterns are documented in detail by the FCA, the CFTC, ASIC, and BaFin. 5 core categories, almost interchangeable across thousands of cases. And most victims could have avoided losing a single dollar with a 5-minute check before depositing. Most never run it. Here's the playbook, the mechanism that makes it work, and the defensive workflow that shuts it down. Start with the most common pattern, the unregulated broker. A platform that looks like a real broker, clean website, working app, a chart that ticks in real time. You deposit, the account shows gains. After a week, you request a small withdrawal, say $200, and it goes through. That moment is the entire scam. The successful first withdrawal isn't a glitch, it's the bait. Because now you trust the platform. The account manager calls, there's a VIP tier, an exclusive opportunity. You deposit $10,000 more, and the moment you try to pull that out, the platform finds a problem, a tax, a compliance fee, a regulatory hold, always more money required. Eventually communication ends, the money is gone. The CFTC and FCA have documented this exact progression across thousands of cases. The mechanics never change because they don't need to. Category 2 is the social one, romance scams and what the FBI now calls pig butchering, shizupan in the original Mandarin. Contact starts on a dating app, on Instagram, or as a wrong number text. Then weeks of relationship building, friendship, romance, sometimes business mentorship. Then a casual mention of a great trading opportunity, usually crypto or forex. You're onboarded to an app. The balance grows fast. You can withdraw small amounts. You deposit more. Eventually withdrawals stop. The contact disappears. Notice the structure. It's identical to the broker scam, just wrapped in a relationship instead of a website. Same logic with signal services and AI trading bots, guaranteed monthly returns, lifestyle marketing, a required affiliate link to one specific offshore broker. Here's the mechanism most people miss. The seller earns a commission on every deposit you make, plus an ongoing rebate on your trading volume, whether the bot wins or loses. In fact, lose then redeposit pays the affiliate more than a steady winner. That's not a trading product, it's a customer acquisition funnel pointed at an unregulated broker, and you are the customer being acquired. Third category, the clone firm. The FCA has a dedicated warning page just for this. The fraudster copies the website, the logo, and the license number of a genuine regulated broker, then runs a fake version at a URL that's one letter different. The license number on the site is real, it just belongs to a different company. The contact details lead to the fraudster, not the broker. Defense is counterintuitive. Don't use any contact details from the website you found. Pull the broker's name, search the Regulators Register directly, and call the phone number listed there. Fourth category, recovery scams. And this one is brutal. Once you've been defrauded, a recovery agent contacts you. They know specifics about your original loss. They claim special access to regulators, courts, or banks. They want an upfront fee. It's often the same network as the original fraud, or a copycat that bought your details on a list. The FCA, the CFTC, and ASIC have all explicitly warned about it. Real regulators do not contact victims offering paid recovery for an upfront fee, ever. If someone calls you with that offer, it's the second hit. Fifth category, the HYIP, High Yield Investment Program. Fixed daily or weekly returns from professional forex trading, multi-level referrals, exclusive algorithms, polished dashboard, no real broker, no real trades. It's a Ponzi scheme dressed in forex language. Early investors get paid from later investors' deposits. The CFTC has prosecuted dozens of these structures. And here's what's changed in the last 2 years. The wrappers are new. AI trading bots leveraging the generative AI hype, deepfake celebrity endorsements, synthetic video of well-known figures fake endorsing platforms, closed Telegram and WhatsApp trading clubs funneling members into unregulated apps, regulated by name-dropping minor regulators to sound legitimate. The underlying scam is decades old. The packaging is brand new. One older pattern still active in 2026. The boiler room. Cold call from an investment advisor presenting credentials of a real regulated firm, small test investment, quick small profit, then the bigger ask with urgency, then the withdrawal block. The FCA's standing rule is the simplest one in this whole video. Never trade with anyone who cold called you. Regulated brokers don't solicit retail clients that way. And then there's crypto. More and more of these platforms accept only crypto deposits. Reason? Chargebacks don't exist on crypto. International wires are hard to reverse. Crypto is impossible. The combination of unregulated broker and crypto rails is the worst case loss scenario. Recovery options collapse to zero. Now the part that actually saves you money, the 5-minute check. Before depositing a single dollar, do this. Type the broker's name into the regulator's official register, FCA Register for the UK, NFA Basic for the US, ASIC Connect for Australia, BaFin for Germany, CySEC for Cyprus. If the broker isn't there, you're done. Don't deposit. If it is there, match the license number on the broker's website to the regulator's record exactly. Any mismatch is a clone firm signal. Match the registered address. Virtual offices and PO boxes are red flags. Check the FCA Warning List if you're UK targeted, the CFTC's Red List if you're US based. Search for recent withdrawal complaints in independent forums, not on broker-controlled review sites. Then test with a small first deposit. Deposit only what you would not regret losing, and attempt to withdraw within the first week before depositing more. If the process drags, asks for verification fees, or stalls behind compliance language, walk. The platform just told you what it is. A few hard rules that defeat almost every pattern in this video. Never trust anyone who cold called you. Never invest based on a social media DM. Never accept a managed account pitch. Letting someone else trade your account is almost always a scam. Ignore guaranteed return language entirely. And if you've already been defrauded, send no more money to anyone, especially anyone promising to get it back. Remember that small withdrawal that worked on day 3? That wasn't a glitch, that was the bait, and it's the single most diagnostic feature of the unregulated broker scam. A platform that lets you pull out $200 early is not evidence of legitimacy. It's evidence the operator is patient and following a playbook regulators have written down in detail. The market is real. The scams wrap themselves in that legitimacy. The 5-minute register check is the cheapest, highest ROI thing you can do before depositing. Verify first, then deposit, never the other way around.
5 patterns, 1 defense. Verify the regulator's register before depositing. Full breakdown linked in the description.